the AI marketplace is really creating a structural scarcity, and that's going to challenge the calculus for all of us, right? And it's not just consuming grid capacity in every major market. It's really impacting how you can get grid power today. How can companies think about load growth? I mean, utilities are now quoting 5 to 7 year interconnect timelines for large loads, which is just incredible, right? That was never a thing in the past. You apply for a grid interconnect, you talk to your local utility, some minor studies. Now, that scarcity is really bidding up retail rates. It's straining reserves, which is what we talked about before. Reserve margins are really getting stretched, which compounds the issue and creates more grid constraints and outages and higher price volatility. But I'll say one thing. So with that comes opportunity. And so for commercial and industrial real estate owners, AI infrastructure growth could be a tailwind, right? Where it can make your rooftop solar and storage more valuable. And it makes the case for grid independence more urgent. And so I think going forward, Dan, to your point, 3% of facilities have on-site energy systems today. I personally think, not just because I'm a little biased, but I think that the market has significant upside, a lot of untapped value. And also, if you look at lots of the new large load facilities that are getting built today, especially in the data center space, most of those today are going to require some form of on-site solution, whether it's generation, storage. So we're talking about a lot of facilities and sites that will have some sort of behind the meter, on the customer side of the utility meter, energy system that will be there for resiliency, for cost reduction, or value creation.
Welcome back to Renewable Rides. Today we are digging into the intersection of commercial real estate and on-site energy. Buildings are no longer just physical assets. They are energy assets. Tenants are asking different questions. Investors are pricing risk differently, and the grid is not keeping up. That is why JLL, one of the world's largest real estate advisors, has built out a dedicated energy advisory practice. And it's a big reason we have executed a collaboration agreement together. Our guest is Brian Rappaport, Managing Director and Head of Commercial Energy Solutions at JLL Energy Advisory. Brian brings more than 20 years of experience in energy infrastructure, origination, and renewable energy solutions, with prior leadership roles at Net Power, BP, and Morgan Stanley. Few people sit at the intersection of energy, finance, and real estate with this much range. We get into why JLL is leaning into energy, the biggest misconceptions C&I leaders still have about on-site energy, how to treat energy as a financial asset rather than a cost line, and what the JLL and VECKTA collaboration unlocks for clients. But before we get into today's episode, I want to share something I've been working on for quite a while now. I've written a book titled Powering Profits, and it's going to come out on May 19th. I wrote it for business leaders who know energy is becoming a bigger problem. Rising costs, unreliable supply, pressure from investors, and customers to do better. But they aren't sure where to start or whether the opportunity is as real as people say it is. This book is the framework leaders need to maximize the benefits of on-site energy and approach it from a place of confidence and empowerment. It draws on everything I've learned across my career, from complex energy projects around the world to building VECKTA and working with hundreds of companies to plan, procure, and deploy on-site energy systems. It's not theory. It walks you through exactly how to evaluate the opportunity, build the business case, and get projects built at one site or across an entire portfolio. I cover the financial mechanics, the 5-step planning framework, how to procure the right system at the right price, and how to think about financing that all stakeholders can get their heads around. And throughout, I share real case studies from companies who have already done this. It's coming out on May 19th, and if you want to get access to chapter excerpts and helpful resources, we'll be releasing around the launch. And the best thing that you can do is subscribe to the Powering Profits newsletter. You'll find the link in the show notes. So now let's get back into today's conversation.
Brian, welcome to the podcast. We are super excited to have you on and for you to share with our listeners your journey in our space, as well as all the things that you're doing there at JLL. But before we get into any of the work or specifics, we always like to start off and get a better understanding of who we're chatting with. So, what are you passionate about?
Well, thanks for including me on the podcast here today, Dan and Gareth. It's great to be here. There's a lot of things I'm passionate about, like skiing and family, but let's keep it energy related here. So that said, the energy markets are really what I'm passionate about, and I've had just a general intellectual obsession with the markets ever since I got going earlier in my career. And I've been fortunate to be able to build a career in an industry that I have a lot of interest in. I really enjoy how incredibly complex and dynamic the energy markets are. And just been fortunate to have been exposed to a lot of my career. Having started out in the earlier days of energy deregulation, and I've was a part of the Enron and energy merchant market unwind, which was exciting and scary at the same time. And then really being exposed to the shale revolution, watching that get going in the mid 2000s, really firmly planting the U.S. as the number one energy producer in the world, which was incredible to see the growth there, less dependent on foreign sources of energy. And then lately, working with a lot of new energy transition technologies, working with a lot of first of a kind power technology to hydrogen, and now just what we see going on in the markets with AI training and compute and just explosive power demand. It's just been a wild ride, fascinating time to be in this market. And the other thing I'll just say is I just love how energy really impacts our everyday lives, right? So much how it impacts society, and for something that's so impactful to all, it's still a market and an industry that is still so widely misunderstood and foreign to most. So I think that's beginning to change. We're starting to see people take notice as they get utility bills in the mail and as companies are thinking about energy expense and the bottom line. But yeah, it's a fascinating place. It's one of the few markets where price signals and physical delivery are inseparably linked. And the consequences of getting it wrong could be real visible and visible and real. So.
Yeah. Where did that interest come from, Brian? Like, was it a family thing? Was it an educational thing? Like, did you have a particular experience?
Not family, because no one in my family worked in the energy markets. It wasn't something that I ever thought about doing when I was in college and undergrad. And, it's just something I kind of fell into. I got out of college and, if we go back to my career, almost 25 years, I've been working in the energy markets. And someone told me about a role with Morgan Stanley's commodities derivative desk. And, at the time, you don't really learn about commodities in school. At least back then, it wasn't really something that was widely studied at the university level. And I fell into a role where I just rolled up my sleeves, tried to get my hands on as much as I could, get exposed to whatever I can. And it's just been a fun, wild ride since. So.
Love that. Yeah, it's interesting to hear like how everybody gets into it. Some are drawn to it from a very young age, and others kind of fall into it and then fall in love with it and never want to leave. Before we get into some of the specifics around JLL, like what does success look like for you, and has that evolved over your career?
Yeah, I mean, success could take on many forms and shapes, I guess. On the professional level, I'd say probably two important levels: clients and market. And when I think about success at the client level, what I think would be really cool is where an institutional fund manager or asset owner in the commercial real estate space 5 years from now has on-site distributed energy resources generating cash flow at their facilities that wasn't part of their original underwriting. And they're doing it not just to reduce energy costs, but create new revenue streams that they on assets that they already own. And at the market level, I'm really excited to see what we can do in the distributed compute market. That's an area that I think has a lot of growth. We're just getting going, but at the grid edge, paired with more local distributed energy resources, this AI inference compute market is just getting going. You think about the advancements in manufacturing, you think about robotics, you think about just data pinging and being generated all over the place. We're going to need to be creative with how we power compute at the more localized level. And these, at the local level, the distributed level is typically where you have more power and land constraints. So I'd say we're not there yet, but we're trying to build that category out. And I'm excited to partner with our real estate teams internally at JLL to come up with some innovative solutions, not just at the gigawatt scale, but also at the local, smaller distributed scale too.
And Brian, you've kind of seen everything from oil and gas, build out, origination of projects, trading. What attracted you to your role at JLL now?
I think the market has changed so dramatically just in the last few years in real estate, and being someone that's operated in the energy space my entire career, I never would have thought or imagined that I'd be going to work for a global real estate company, doing energy related work. So it's been an interesting ride for myself too. But I'd say why energy and why real estate? Because energy has become a real estate problem. It's not just an operating cost, right? And so you have a convergence of a lot of factors, but three main factors I'd say over the last few years that have really compounded the issue and has brought energy at the forefront to real estate discussions. One, our grids are really stressed. We all know that there's the grids are constrained, and that can really be visible and impact asset valuations today at the real estate level. We've got reserve margin compression at our central grids, right, where the independent system operators typically maintain enough slack in the system to deal with emergencies and power plants that trip offline. It's really like a contingency plan. And for the first time, I think ever, forecasts are showing that reserve margins are going to be going below the target reserve margins that these grid operators are planning for, which is a really big thing. So that has a compounding effect, right, for how you get power from the grid, interconnection delays, and of course, energy expenditures, right, utility bills. And that's really starting to show up as we think about cap rates for real estate. And then tenant demand, right? Tenant demand has really shifted. We have large occupiers, industrial plants, we have life sciences, logistics, tech, of course, and they are now including energy reliability and decarbonization commitments in their lease requirements. So that's really important. So it's really not, it's a leasing risk issue, not just an ESG issue. And then I'd say our clients are really asking, these are conversations that wouldn't have happened 5 years ago for a real estate company, but now more than ever, we're getting more and more clients, whether they're occupiers or whether they're investors, asking us for support and help in the space.
Yeah, you really resonates. I mean, that's exactly how we're seeing the folks that we're working with, and super excited to develop the relationship together. Let's before we dig in and spend most of the conversation around the distributed and on-site piece, can you share with our listeners what is the breadth of offerings that JLL Energy Advisory has? Because I know that there's many different facets of it.
Sure. So the Energy Advisory team was born out of our sustainability consulting organizations earlier last year. And we have about 45 people across technical and commercial functions. You can think of it at a high level. We really we serve as an owner's rep to our clients. You can think of us as a trusted advisor working for our clients, acting in a fiduciary capacity to help them design, assess, and implement solutions that address energy risk. So at a high level, our energy systems are really complex, as we said before. That's what I love about it. But a lot of people that aren't in this space just aren't really. They don't. They know what they don't know what they don't know. And so today, now more than ever, our team is really spending a lot of time with our clients, helping them plan and helping them figure out how to navigate and manage these risks. And it can be quite significant. As far as taking it down to the more granular level and thinking about what are some of the specific services and things that we do for our clients, we do everything from on the front end, energy procurement and rate optimization, as a foundation service for our clients. That's sourcing, from sourcing competitive retail supply and evaluating rate tariffs from utilities to optimizing time of use or providing peak shaving services to reduce demand during high peak hours of the day, to participating in demand response programs. We work with our clients on their decarbonization and scope emission reduction programs. So we work across our corporate and industrial real estate client base, and we help them procure renewables. So that could be long-term strategic procurement programs where we try to aggregate demand across on a portfolio-wide basis to get our clients involved in getting access to low carbon renewable supply sources, and provide risk management, long-term risk management tools as well. If things could be done on site, which is where it gets really interesting and exciting, and this is where we can work with VECKTA very closely here. We have a big practice that does distributed energy resource advisory and implementation for our clients. So that's a big part of our business where we've operated in the past and we're continuing to scale up. And that's, behind the meter solar, behind the meter generation, potentially paired with energy storage, where we work with our clients to assess feasibility of on-site resources, to doing real detailed financial modeling, developer EPC selections. We go to market for our clients, and we serve as an owner's rep through deployment too. Really, at the end of the day, helping our clients de-risk project execution and allow our clients to get the best terms, conditions, and projects that meet their objectives and make the most impact. And this is where VECKTA really can supercharge us. I'm excited to dig into that. Other areas that we spend a lot of time and effort: grid services and market participation. So again, how we help our clients reduce energy costs through demand response programs, capacity market enrollment. And then once you initiate and deploy on-site energy resources, helping them manage and optimize those resources most effectively, so they operate and create the value that they were intended to do on the front end. And then last, I'd say we do a lot of strategic energy intelligence. So that's providing, forecasts, providing, detailed assessment across portfolios, big institutional real estate portfolios, evaluating where clients might be most exposed, where the grids are most constrained, where the grid is the highest, where there's a lot of volatility. But I'd say the most important thing, and I think you guys can attest to this, one thing about JLL, we are technology and solutions agnostic. So we don't have a particular horse in the game. We're not pushing one solution over another. We try to maintain an unbiased approach to understand our clients' needs and work across a host of different solutions and technologies.
Absolutely, and I think that's where the relationship can really shine, because that's exactly a part of our ethos as well. Well, we're very excited. I mean, today this is launching on the day of our collaboration announcement, and so maybe you can share with the listeners, what are you seeing as it relates specifically to on-site energy, that there might be differences across the landlords, tenants, and owner occupiers? Because as you've started to talk about it, this is a new asset class when we think about the landlords, but how are you seeing the differences amongst those kind of three categories?
That's a great question. And I know we've been having a lot of those conversations too, amongst the teams. I'd say, there are meaningfully different categories across our client base, right? When you take it down, sector, like industrial sector aside, we have clients that are institutional owners and investors, and that's a big part of our business, right? Where the opportunity is asset value creation through tenant retention and NOI enhancement, right? I was reading the other day, JLL research showed that less than, believe it or not, 3% of commercial buildings have solar. And as you can imagine, even less have energy storage. So that is a huge untapped market opportunity. And when you think about the real estate sector in general, the built environment accounts for like 40% of our global emissions and 40% of energy demand. So there's a significant untapped value and infrastructure to leverage there, whether it's rooftops, adjacent land, parking structures that can generate cash flow for investors of real estate. Then we go to tenants, right? You have tenants and corporate occupiers, and the primary focus there is driving cost certainty and meeting ESG commitments. And so they want supply stability, or they may need more power for growth, right? For low growth and expansion, and they want that carbon reduction without capital expenditures, which gets interesting, right? So we think about what's the best way you can help them achieve those goals, and then I'd say the last category is owner occupiers. Owner occupiers is probably the cleanest as far as decision maker, full control of the value stack. The main barrier there is just internal capital allocation, right? So, an on-site energy project may compete against a core business investment. So really it's our job to make energy return on investment legible and understandable at the CFO level, and where it's easy for people to understand and implement, and also think about how these projects can compare to other like extensive capital projects and planning that may not be have an energy component to begin with.
Brian, on that point, I think it's super important, isn't it, where this has always just been a cost input to people's businesses, and it's almost been this just silent line item on the balance sheet or the profit and loss statement that just went up at the rate of escalation, inflation, and they didn't really think too much about it. And you're now describing that this is like actually potentially a revenue generating opportunity, a way to really monetize their assets. How do you help people think through that this isn't just a cost line item, that this is actually, there's a lot more to it?
Yeah, I mean, it's a good question. There's meaningful value creation across a large commercial industrial real estate portfolio. And again, it's getting people to think about the impact that these energy investments can have on real estate cap rates and asset values, instead of just treating it as an operating expense, right? So, like as an example, let's think about this. If you have a hybrid scenario where you have behind the meter solar and battery storage project that might be deployed at a large industrial facility, say it's 500,000 square feet of industrial space, and that on-site energy system can reduce a utility bill by, call it $400,000 a year. Okay, that's quite significant.
Yep.
At a specific cap rate, say it's 5 or 5.5%, you're talking about adding an incremental, $6 to $7 million in asset value just in that decision alone, right? And that's impactful for real estate investors, owners and occupiers of real estate too. And that's really, it goes beyond just an energy saving story, right? It's a valuation story. And so I think that's an important distinction and a model that we want to spend time focusing on with our clients day one, right? Where we really model those project level economics with them. How does it impact real estate cap rates? How does it impact investment returns? How does it how can you commercially implement solutions most effectively, and also how does that stack up against other competing investments like we talked about before?
Certainly. I think we're also, and I'm curious your take on this, moving into an era, like historically there's been the landlord tenant kind of split incentive conundrum where the landlord has the control and they can deploy one of these systems with their capital, but they're not going to receive the benefit of it. The
Mhm.
tenant is the one that's going to be benefiting, but they may not make sense for them to deploy their capital into one of these systems. And I think we're starting to see that tipping point of landlords wanting to participate. And for me, the conversations I've had, it's really been around basically paying less to the utilities and almost transitioning some of what your tenant is paying to the utility to you as the landlord. What are you seeing in this kind of the split incentive conundrum, and are you seeing a shift?
I think there's typically, in most situations that we've encountered or starting to encounter with real estate investors, landlords, and institutional investors, is the alignment that they have with their tenants. It really comes down to like tenant retention risk and really making sure that landlords or real estate investors share in that value with their tenants, right? And it's important. There are markets that we operate in today that are saturated. You have a lot of supply in those markets, and I think the investors understand that those tenants could potentially go somewhere else quite easily, especially if it's not an advanced manufacturing facility or if it's something that requires a significant upfront investment. And so I think it's that it's an aligned value across the tenant landlord space where you are aligned on cost savings, aligned on resiliency, and aligned on planning for a long-term, strategic value share and relationship that really makes the difference, right? And I think that's where investors could be most impactful is providing those lower cost, higher resilient solutions for their facilities, because ultimately that's going to drive more demand to your facilities.
I like that. It's not only split incentives, it's like actually de-risking your business model, isn't it? Like
Yeah,
otherwise you can end up with a bunch of stranded assets that you just can't utilize for what they're designed for. And
that's right.
and that's going to be a really interesting transition point, isn't it? Where people go, like, do we want to go on the offensive or is this purely a defensive mode?
Then it could be both, right? And so
Yeah.
like we really spend a lot of time and we try to work with our clients to understand what are those objectives, what are the risks, and then what is the physical infrastructure and the facility, what can it support? And then
Yeah.
what are your lease terms? How, and then the payback of an energy investment, as you know, is typically longer than a lot of lease terms. So how do we navigate the complexities? We really try to distill it down and do it in a way that doesn't need to be complex, and it's not.
Yeah.
So
And you touched on reliability, Brian, before in your previous answer. And I think, when we started this, Dan and I, like 5 or more years ago, it was always sustainability, cost, reliability. This was like a niche sustainability play. And then it rapidly then shifted to, hang on a minute, this is all about cost, sustainability, reliability was never on anyone's radar. You starting to see reliability starting to be more prominent in people's minds and risk profiles.
I mean, significantly, like if it's one of our biggest, if not the biggest accelerant right now,
Really?
is
Nice.
reliability conversations. And again, these were conversations that we weren't having 5, 7 years ago. Our grids, we're fortunate to have well-functioning grids for the most part. We are very fortunate in the US to have very reliable, low-cost supply of energy. But, I think, people take that for granted. And I think that's becoming really evident now that based on the conversations we're having, we have lots of large industrial clients that saw what happened in Texas in like 2021. They see these NERC reserve margin warnings across these key ISO regions, like as I mentioned before, where there's not as much slack in the system as there used to be. Supply is just not keeping up with demand. Grids, transmission, infrastructure takes a lot of time to build. It's not happening fast enough. And it also takes multi-years to get utility interconnection, to get grid connected. So grid reliability is no longer a utilities problem. It's really an asset manager's or owner occupier's problem. And that shift is in framing opens just about every conversation we have, right? Everyone wants resilience, but then it comes down to at what cost, right? In some cases, it could be a critical facility that's managing life-saving equipment. It's a manufacturing facility where that cost of downtime is a non-starter. It can't happen. And you need to plan for that resiliency. And I'd say where peak demand and grid reliability is a factor today, maybe the concern is 1 to 2% of the year, right? Where the utilities have some concerns around supplying power to their customers. And the utilities have a responsibility to serve all customers with reliable energy. Um, you know, that's, who knows, in 5 years from now, maybe that becomes 5 to 10% of the year where we continue, if we continue on the same pace and trajectory as we are today. And that's what some of our smart clients are thinking about planning for today, and not waiting. I mean, you need to. There's many ways to get involved and to really assess your portfolio and think about how you can plan for these risks, because we don't see any signs of it letting up anytime soon.
Super interesting, isn't it? Because I was reading an article yesterday where reliability is actually going to become a very interesting topic, because the data was showing that like 1 in 10 people in the state of Georgia can't afford power. And so is in that situation the utility providing reliable power? Even though there's power there for them to buy, if they can't afford it and they're being cut off, then there's no longer reliable power. And it'll be interesting to see, like, there's the real power outage risk, but then there's the, at what point can we just physically not afford our power and we're not going to operate? And that to me is also unreliable.
That's a good point. That's another definition of sustainability, right?
Yeah.
Certainly, certainly. Well, yesterday. I was actually up in the greater LA area, and I was spending some time with an aerospace manufacturer, and reliability was actually the bulk of the discussion. And for them, it was a couple different things. One, they've got clean rooms that any sort of meaningful disruption in power and all of the air handling equipment can damage all of their manufacturing processes. But then there's also the control room, so they actually man controls for when their capsules are up in space. And so for those, and they're a tenant and they're getting prepared to move into a new facility. And so a lot of our discussion was around UPS systems for their kind of millisecond switchovers, and then other backup systems for clean rooms that can take seconds or up to a minute to switch over. But in their case, they're a tenant, and this is not something that they've gotten the blessing from their landlord of do what you need to do, but the landlord's not even involved because they're just having to take matters into their own hand. And I'm curious, are you seeing an environment in which tenants are coming to the landlord and saying, it's your response? Like, I know it's not your control necessarily of the utility, but it's your responsibility to provide me the infrastructure, the tools to be able to ride through some of these challenges.
Yeah, for sure. There's a lot of tenant occupier push. In some cases, they may even have the rooftop lease rights, right? Where they may negotiate that up front in their leasing agreements with asset owners. But for sure, if a tenant isn't getting reliable supply of power, depending on what the need is and what the operation is, that's not good. No one wants to be told when they need to run and when they can't run. And businesses have a responsibility to operate potentially continuous or on the clock. And if they're not getting reliable power, I'm sure they're not going to be happy when they're cutting rent checks to their landlords. That's a concern. So
Certainly.
yeah. The good thing is, I was just going to say, Dan, is that when you think about resilience, right, the cost of resilience, right, it's different for everyone, right? It depends on what the need is and depends where, but there's a multitude of ways that you can create revenue streams today from like an on-site battery energy system, right? And whether it's for behind the meter cost reduction, or whether it's and reducing your utility costs, or providing services to the grid. And there's so many ways you can subsidize today the cost of this resilience and drive that down. which really was not a thing in the past, right? So it's important
Yeah.
distinction.
And I think it's interesting you say that because I think too often people think batteries, backup. And there's so many other benefits and value streams that can come off a battery that historically, if it was purely used for backup, it wasn't very economical unless you had extreme losses due to power outages that you could factor into the calculations there. But as you mentioned, with many of these other value streams that can come off a battery system, it can certainly make a very attractive investment.
That's right. Yeah.
Well, so for a commercial industrial leader that's listening right now, what would your recommendation be as far as if they've not done anything related to on-site energy or distributed energy, what would you recommend as their first move?
I would say don't freak out, don't panic. Give us a call. And portfolio triage is a good way to start, right? Don't focus on a particular project. Don't shoot at the hip. Don't, start picking a site and hiring a developer. That's probably not the best way to go about it. Most of our clients operate, multi-site facilities, whether they're institutional asset owners or whether they're owner occupiers. These are really big, high-load, energy-intensive facilities, and it's really important to get it right on the front end. And we'll work with them to understand what their energy exposure looks like across their portfolio, which assets are most exposed to price volatility, which have the best physical characteristics for solar or storage or other forms of generation. And you could have some that face regulatory pressure. So at the end of the day, we'll work on the front end to do proper planning and strategy development. You can do a heat map to really overlay their concerns with where we see concerns on the grid and come up with a real good action plan to address those risks and prioritize the sites that are most exposed or where the most value can be created. And that picture can take, weeks, it could be even days, but not months. And hopefully that's going to help inform where to focus capital and focus time and attention. And, one thing I'd like to say is, and I'm sure you guys can relate here is, it's a big reason why we're working with you guys to help accelerate those the feasibility assessments, the screening, and to really help accelerate the process.
Yeah. So just building on that, Brian, what do you think? We've been working together on this relationship now for several months. What is it that was the kind of real key turning point for you in realizing the opportunity in the market and the capabilities that we can bring together?
Yeah, it's a great call out here. I'd say it's a true heightened sense of urgency.
Yeah,
we have a great team. We've been doing a lot of this stuff in the space, and from on-site distributed energy projects to working with our clients where on-site solutions are not feasible. Helping our clients manage risk is one thing that we've been doing for some time, but we're at this inflection point now where we really want to materially scale that. And we have so many inbounds. We have so much interest. We operate lots of large critical facilities for investors and occupiers across the country, really across the world, that we really need to find the right relationships and the right platforms like VECKTA here to scale and accelerate distributed energy projects. And so this relationship, it made a lot of sense to us. You guys really solve a lot of the front end problem faster than anything else that we've seen in the market with some detailed portfolio screening, site assessments, and then your marketplace deployment platform is really impressive too, to help really implement projects and streamline the process and get the best solutions for our clients, right? Again, we have a fiduciary responsibility to serve our clients in the best capacity that we can. And I like to think about the relationship between JLL and VECKTA as, we bring now the connective tissue in the middle from, the early stage directional screenings to that back end project execution, where we focus on owner economics, navigating lease and power purchase structures for our clients, as we were talking about before, helping our clients determine what's the optimal commercial strategies and deal structures, integrating across multiple technologies, and informing capital stack structuring, really taking preliminary feasibility assessments, de-risking the project significantly or projects significantly so that the best ones go forward with a much higher degree of success. And when developers bid on projects, there's no gray area or ambiguity. People know exactly what they're bidding on and what they're doing. Clients know exactly what they're getting. And, ultimately, that's the way a good collaboration should function and work. So I think that's a good division of labor, how we're mapping things out together.
Yeah, I love it. We're super excited because you have the relationships, you have the trust of your customers, you know their assets, you know their broader strategy, and then together we can then help unlock turning that sort of very disparate data into intelligence so that they actually then have the confidence to go and do something about it. Like you were saying before, shooting from the hip and taking on single projects. You're going to get maybe some quick wins, but you're not going to realize that compounding value and the greatest return on investment, and ensuring that the right partners are sourced to go and build and operate these assets, because they are 30-year assets, aren't they? And so we can't be making short-term cost decisions and overlooking those lifetime returns on investment. So I love it. And it's going to be very impactful. And I definitely believe the real estate market needs this to really realize the opportunity and turn the built environment into the power plants of the future.
I think you hit on something earlier, Brian, which was and we see some of the similar things in some of the research that we read, is that 3% of commercial industrial buildings having on-site solar or some sort of on-site system. I've recently been kind of comparing that to Wi-Fi, and how back in 2000, only about 3% of commercial or industrial buildings had Wi-Fi. And fast forward 25 years, it's over 95% now. And I'm hopeful, and I'm confident at the same time that over the next 25 years from where we sit today, that closer to that 95% number is the ones that are going to have on-site energy systems. I think, what do you think is in order for us to get there, what do you think are some of the biggest misconceptions within either commercial real estate asset owners or occupiers or tenants that are preventing them from pursuing these projects?
I think it's some of those structural challenges and questions around how to implement and how to navigate this with whether it's an investor client that has a big footprint that wants to deploy on-site energy resources. What's the best commercial structure? What's the best way to work with your tenants, achieve this alignment? But there's sophisticated energy management systems out there today. There's intensive data analytics and reporting technologies out there today that really can compress the timing of deployment, but also once assets are operational, very easy to operate and to manage. It really doesn't need to be any more complex than the way you buy power from the utility grid today. So I think it's just a matter of getting level of understanding, and perhaps getting a few wins and getting some projects under your belt. You look at some companies like the Prologis of the world and others that this is what they do every day. I mean, they have a big footprint, and they're prepared, right? And so we're working with a lot of other asset owners out there to really plan and think about distill this down into easy to implement bite-sized pieces where it's really not that bad. And you work with folks like us and VECKTA and others, and there's a lot of ways to implement projects that doesn't have to be complex.
Yeah. Brian, before we jump into the power surge round, I know you're hosting a panel on data centers and AI next week, and you touched on before about, finally energy in our careers has become mainstream media. What's kind of exciting you, or what observations do you have of how much AI is changing the landscape and creating opportunities for us?
Yeah, it's having a massive impact, right? I mean, the AI marketplace is really creating a structural scarcity, and that's going to challenge the calculus for all of us, right? And that's, it's not just consuming grid capacity in every major market. It's really impacting how you can get grid power today. How can companies think about load growth? I mean, utilities are now quoting 5 to 7 year interconnect timelines for large loads, which is just incredible, right? That was never a thing in the past. You apply for a grid interconnect, you talk to your local utility, some minor studies. Now, that scarcity is really bidding up retail rates. It's straining reserves, which is what we talked about before. Reserve margins are really getting stretched, which compounds the issue and creates more grid constraints and outages and higher price volatility. But I'll say one thing. So with that comes opportunity. And so for commercial and industrial real estate owners, AI infrastructure growth could be a tailwind, right? Where it can make your rooftop solar and storage more valuable. And it makes the case for grid independence more urgent. And so I think going forward, Dan, to your point, 3% of facilities have on-site energy systems today. I personally think, not just because I'm a little biased, but I think that the market has significant upside, a lot of untapped value. And also, if you look at lots of the new large load facilities that are getting built today, especially in the data center space, most of those today are going to require some form of on-site solution, whether it's generation, storage. So we're talking about a lot of facilities and sites that will have some sort of behind the meter, on the customer side of the utility meter, energy system that will be there for resiliency, for cost reduction, or value creation.
And I think you touched on it a little bit earlier, but that whole distributed compute component, I think will really we're at the infancy of that. But the more I listen and read in the market about that, I think more is gonna head that way, especially as we look at how constrained it would be if you tried to get a gigawatt connection for some hyperscale data center. So, well, let's shift into the power surge round, and I always love the first question. So, Brian, if you could be any one energy technology, what would it be and why?
That's a good one. And I need to go back to listen to some of your prior podcasts to see what other people have answered. I think probably a battery. Kind of in the past, we would have assumed, why a battery? That's a boring, piece of equipment, like a battery. But batteries are actually pretty cool. And they're actually, I'd say, widely misunderstood and undervalued. But a battery today can create a lot of value. So if I'm going to be a piece of equipment, I want to create a lot of value. On the surface, it looks like a very simple storage device, but the application today especially is so diverse, right? And it could have such an impact with like a real layered value stack, from behind the meter optimization, demand response, peak shaving, energy cost reduction, to obviously backup resilience, and then providing services to the grid too, right? With capacity and ancillary value. Batteries can do a lot of neat things today. So I want to say a battery.
Love it. And none of our favorite childhood toys would have operated without batteries. So they bring a lot of joy.
Sure.
Well,
Different types of batteries that we played with when we were kids, though, right?
yeah, exactly. Yeah. You're obviously well read and well researched, Brian. You touched on JLL's research before. Do you have any favorite recommendations for books, intel, podcasts, anything like that?
Of course, the Renewable Rides podcast.
Yeah, thank you.
Sure. That's number one on my playlist.
Nice.
I used to commute to work a lot and in the past, and I enjoyed listening to some podcasts back then when I was commuting. Unfortunately, I don't get to commute that much, so I don't get to really listen to a lot of podcasts. I know there's a ton of good ones out there. Um, and I think I've just been working too many hours that I haven't had the chance to get enjoy many good books lately. But I just like to read the news. I like to stay current. I like to just. I know that sounds kind of cheesy and generic, but I just like to know what's going on in the world. And again, going back to the energy markets, right? Being how they impact society and impact everyday life so much. The energy markets are so intertwined with just politics and government and the economy, right? That every day something else is happening. There's never a dull moment, and I just love to stay on top of what I think might be impacting the energy markets and having then obviously an impact on our clients and where we can help them.
It's a huge factor, isn't it? I was just thinking about this as one of the big opportunities for your customers and our customers is when your business is being impacted by a social media post on an hourly basis, you're exposed and you have an opportunity to take control over your energy costs and not be reliant on those social media posts. And
Right.
when we're living in that world of that real-time feedback loop, it's pretty glaring, isn't it?
Yeah, for sure.
Yeah, it's a wild time, and arguably energy is at the core of any sort of geopolitics. So I hear you on keeping up on those. Well, Brian, we always like to close out with having you finish this statement. Can you finish this for us? In my life, I will have been successful when.
When I retire, no. Maybe when my family actually understands what it is that I do for a living.
Nice.
My kids sometimes think I'm saving the world when they were younger, at least. Now they're not as naive. But no, joking aside, um, I I think it's really about making an impact at work, right? And because we spend so much time at work, and if we have the choice to pursue careers that really drive us, that are interesting, and seeing the impact of our work really pay off and become a reality, right? So seeing how a project can come from an idea, and advising on it and helping to implement projects and seeing them actually get deployed is kind of cool. Building things, right? That kind of impact, in my career at least, has been kind of cool and fun. And if we're doing if we're making an impact on the bottom line, financially, but we're also doing something good for the environment too, while supporting economic growth, is I think something that we all here in our careers can make an impact, and I think that's neat.
Yeah, I
So
love that. And so if you could leave one reminder in every business leader and executive's mind as they listen to this, what would be the one key takeaway that you wish they all knew?
grids aren't going to be less constrained going forward. I think you know we're like in uncharted territory now. We have, as we said before, a confluence of all these factors: unprecedented demand growth and power, electrification of anything we can electrify. Um, Throw on top of that environmental goals and policies and regulations. Our energy systems are only going to become more complex. And so I think it's the building owners, it's the asset owners, the people who treat this as a crisis will get hit by it. It's the people that start to plan, start to engage, and start to think about ways that they can mitigate these risks earlier on, and have a game plan. Well, will typically outperform. So
This is
yeah,
great. Absolutely. Couldn't agree more. Brian, we are incredibly excited to be kicking off officially, even though we've been working together for a while, kicking off this relationship with JLL. So much to do together, so much scale to be had, and so much impact for our collective customers. Really appreciate you, the team, and excited for what we can do together.
Here too. Thanks for the time to participate on your podcast. This was fun, and I love learning from you too as well. You guys have a great team, and yes, we've been working together for some time, but I'm excited to dig deeper and really see where this can go, and appreciate the time today.
It's been a pleasure.
Love it.
Thanks, Brian.
Thanks, Brian.
Appreciate it. Take care.
We receive a lot of questions from business leaders around the world wanting to learn more about the energy transition, what is possible, and where to start. So to help you stay informed and up to date on best practices, opportunities, risks, and success stories, we created an industry newsfeed at VECKTA.com/news with all our podcasts, blogs, and newsletter. Check it out and connect with Dan, myself, and the VECKTA team to learn more. Cheers and have a good one.